All right, traders, a very warm welcome to you all. I am Devang, and today my agenda is to run you through three rules for trading support and resistance. These rules are very vital, they are very essential and very important. They are very easy, but just listen to the video till the end because this will really help you to up your game when it comes to support and resistance trading. So whether you are a person who trades breakouts, breakout is basically if you have a resistance, lined up at let's say 100 rupee level and price goes above 100, and that's called a breakout. So if you trade breakouts, basically why people trade breakouts is to get an explosive move immediately. Or if you are a person who trades the support and resistance in a traditional way, which is you buy at support or sell at resistance, these rules become very important because the main thing involved in price action trading is your support and resistance. So today we'll talk about these three rules in detail, what these rules are. I'm assuming you already know what support and resistance are. If you don't know, we'll just run up through the basics of what exactly it is so that you can have a very good flow throughout the entire video. So guys, before I get started, give it a thumbs up, like this video, subscribe to our channel, click on that bell icon below, and comment if you like the video or not, because this really motivates us to produce content like this every single day for all of you. All right, traders, let's get started. Firstly, let's talk about what is support. Support, basically, if you see the charts, I have the chart of Tata Consultancy Services on the daily time frame. So on the chart, you can see that I have drawn two levels. This level is called a support. Support basically means it is a floor. So imagine that your price of Tata Consultancy is coming down, it hits the floor and it rebounds from that floor. That floor is called a support. Support is an area on the chart where your demand or your buyers, they become more strong than your sellers. That's the easiest I can put it. So you can see the chart of Tata Consultancy. Price from 2270 levels comes down to 2050 level, and from 2050 level it bounces back up, and you can see it again, you come down again at 2050 level, again you bounce back up. So it is, support is a floor. You keep on hitting that floor and you keep on rebounding from that floor because demand is more than supply. Demand are your buyers, supply is your sellers. At the same time, what is a resistance? A resistance is an area on the chart where the sellers, they become much more stronger. So if you look at the chart again on TCS, you can see the 20 to 70 level approximately is a resistance. The reason I tell you that is because whenever you go above from 2000 to 2020 to 50 levels, you always take a supply pressure there and fall down. You can see that the same thing is happening multiple times. So whenever in the future you come to that price area, you always fall down. The reason is that because it is a horizontal ceiling. And the rule with the ceiling is that whenever you are coming from a support to the resistance, you will clash and then again fall down because it's very difficult to break a ceiling on the chart. So that is a basic idea of what your support and resistance are. So having said that, let's get into the rules. The first rule is that you cannot blindly buy support or blindly sell resistance. Now, let me explain what I'm telling you. A lot of people make this mistake because a lot of people who come to us for mentorship and training, what they have been doing is they, for example, say 100 is a support of a particular stock, price comes down to 100, and they immediately buy just because that 100 was a support earlier. That is a very a big misconception about support and resistance trading. So let me explain what I'm getting at. You see your prices driving all the way to support from 2250 on Tata Consultancy, but it doesn't mean you just buy because you're at support. The reason people buy at support is because they can get a very, very small stop loss. So if I can show you the targets, how my trade would be placed. If you come to a support, my trade would look something like this. I would keep a very tight stop loss and my target would be something like the resistance. And I get a 4:1 trade. That is the entire reason why people like to buy a support, having a tight stop loss and having a very big target. Now, the problem is if you just come to support and buy without some confirmation, you are in for a big problem, I would say. So if you look at the chart of TCS at this exact point of time on 27th May, you got a 26th May, you got a very big red candle. So this red candle, I cannot place a buy order yet because I do not have any kind of confirmation. But you can see the day following this red candle, you have some kind of a doji being formed. So now when you get a doji in the market on your support, this is nothing but an additional confirmation that the trade is going to reverse from there. As simple as that. So what I'm doing is I do not blindly buy on that red candle. I wait for some kind of a candlestick confirmation. There are tons of patterns out there. We have done many videos on candlesticks, so do check them out if you don't know them. But otherwise, there are tons of patterns which are bullish or bearish, etc. So one example was you get a doji here, and when the doji came, the next candle opened a gap up, and you got a good reversal flowing from that. Another example I can show you on the charts of TCS would be something like this. So you are coming to from a support, you are coming to a resistance. So if I come to a resistance, it doesn't mean I blindly sell. That's one thing I want to make clear. If you come to a resistance, so for example, at this point of time on the 8th of January 2020, you are entering the resistance zone. So does it mean if I've bought at 2000, should I sell it here? No, it's not like that, because it can lead to a breakout. Number one. Number two, you need some kind of candlestick confirmation to make sure that the trade is going to reverse from there. Why people like to sell at resistance is because if I open the target setting 2 again, if you short at the resistance, your stop loss will become very small. At the same time, the target becomes very big. That's the reason why people in your intraday trades or in your long-term trades, they like to go book your profit or they go short on a resistance. Now, coming back to the main problem, you can see you got a very big green candle on the 8th of January. On this day, I cannot book my profits because currently I am bullish in the market. Now, when do I book my profits if I bought something here? Is at this candle on the next day, which is your 9th of January, because this is nothing but a bearish Arami candlestick pattern. If you have missed this, you can see a pattern over here on the 16th of January, which looks like a bearish engulfing candlestick pattern. So what I'm trying to say is do not blindly buy support or do not blindly sell a resistance. Come to the support, get a candlestick confirmation, come to a resistance, get a candlestick confirmation, and then only trade. One more example I can give you is maybe Axis Bank is one good example. I think which I have particularly traded in the last year. Right. So this is another, you can see a range bound market on Axis Bank in 2019, 2020. So the support resistance have been placed. It's an area of supply. The support is area of demand. And you can see clearly that whenever I come from a resistance all the way to support, I cannot just buy because of a red candle coming into support. I can't blindly buy. I see some kind of a hammer candlestick formation, then I can go long on the stock because a hammer gives me the additional confirmation I need over a support to make my trade more profitable. If you blindly buy into a support just because you are coming to a support, it is quite possible you can end up going all the way down. So this is the rule number one, which I wanted to make clear when I talk about support and resistance trading. So do incorporate this rule. If you were using this rule before, or if you have been missing out your trades because of this rule, mention in the comment section below if you were making this mistake. So now let's get into the rule number two. The rule number two is that the support and resistance is not a level. The support and resistance is a zone. That's a very, very important rule. A lot of people make mistakes due to this. So let me explain what I'm trying to come at. So let's say the resistance is placed at 757 level. The support is placed at a 700 round number level. So does that mean your stock has to come to exactly 700 and bounce back? Does this mean your stock has to come to exactly 757 level and bounce back? No, that's not what it means. If you say these support and resistance are levels, it means you have to exactly touch them. But understand, this is not a theoretical subject. Market is all about psychology. Market is all about emotions. So when you come to a support, you have to give some kind of room, some kind of benefit of doubt to both the parties. What I'm trying to say is, let's assume 100 rupee is a support for a stock ABC. If 100 rupees is support for a stock ABC, if you've established that from the past, it is very, very possible that the stock comes to 110 and then bounces back rather than touching your 100 number. Why does this happen? You can ask yourself. The reason is, imagine someone like me who wants to buy this company ABC, and I'm waiting for the stock to come to 100 round number level. But every day you see the price going to 130, 125, 120, 115. Now what happens is, when the stock has been going lower, some kind of emotion, which I would call it greed, comes into the picture. Greed takes over. Greed tells me that maybe it's a possibility that you never hit 100 and you might bounce back from here and you miss the entire trade. That's quite possible. Think about it. You have a stock, Yes Bank. Let's say the support is at 13 rupees. Yes Bank is at 18 rupees. And you see Yes Bank from 18 rupees falls to 14 rupees. Will a emotion, greed, come into your mind and say, let's buy Yes Bank at 14 rather than waiting for a 18 level, because it's quite possible it can bounce from 14 all the way to 20 and you can miss a trade. So that is the reason I'm trying to say, when you talk about support or resistance, you have to give some room. Now, what is this room? So in this example, I said 100 to 110 is a support area. So this room, there is no particular formula. You have to define this zone through experience, through the past, what has been happening in the stock. So I'll give you some examples, but the same concept will apply for your resistance. So let's say 200 rupees is a resistance for the stock ABC. And if my stock has been going higher, it is possible you never touch 200, but you still bounce back. The reason is because now an emotion called fear will come into the picture. You come to a 190 level and then you fall from 190. It is quite possible you touch 200. I'm not saying you can't, but it is also more likely than not that you come to 190 and fall from 190, because if you, let's say, have bought at support of 110, which we discussed 1 minute back, you want to sell the stock, your target is 200, but once you come to 190, there is an emotional fear that comes in your mind that says, what if the stock never reaches 200? What if the stock from 190 plunges 200 back? It's a possibility. So because of that fear emotion, you sell the stock. It's not you, it's basically everyone follows the same thing. It's a psychological aspect of trading, basically. So everyone in the market, they will sell at 190, 192, 195. They do not sell exactly at 200. So always when you set a target, you always never sell at the resistance. Your target is always below the resistance. At the same time, if you are shorting the stock at resistance, your target is never support. It is always little bit above the support. The reason is because you might miss the trades, miss the profits because of these emotional aspects. I think if I go back to the Tata consultancy chart, this entire concept, rule number 2, will become quite clear, because again, this was one stock which I traded back in 2019. It was a very simple range bound market on TCS. Look at this. Look at the example. 2290 is a resistance zone. So it doesn't mean you will exactly touch 2290. It means that it is a zone. 2290 to 2270, a 2030 or 2010 rupee a price movement is a zone. It's a resistance. So you can see exactly here, you are exactly touching the zone. If you see a little bit ahead, you are not exactly touching the zone, but you are a little bit below. So that's what I'm trying to tell you. So either you stop at resistance, or a little bit below, or a little bit above. All of these things are fine. So do not be rigid in your analysis. You have to be very open to your analysis, basically. That's what I'm trying to say. The same example is that on the downside, this level is your support. You can see quite clearly that sometimes you exactly bounce back from this level. There are times when you have bounced a little bit above from this level, you never touch the support. So if you short the stock, your target will never be the exact level, but it will be always a little bit higher than that level. So always keep this point in mind. So when you trade support and resistance, do not be rigid. Form a zone, because it is very possible you might bounce from a little bit higher, you might bounce from a little bit lower. All these things are quite possible. I hope all these rules are clear. This is rule number 1 and rule number 2. If you have any doubts, just mention in the comment section below, or you can schedule a call with us at 8080343031. We'll help you out, schedule a demo session and get you started in these concepts. Also, you can message us on Instagram at the financial analyst, and we'll totally help you out. Right. So these are the 2 rules. Now let me come to the last rule, the rule number 3, which I want you all to be familiar with. And that rule is that history repeats itself. That's a rule basically which applies to the entire technical analysis field. But I think it's very, very important for your support and resistance also. So the rule is that history repeats itself. What I mean by that is a lot of people come to ask us that if, let's say, this level is a resistance, or sorry, this 2290 is a resistance and 2200 support. So till when does this hold valid? Is it valid for 1 month, 2 months? How much? How much time? That's a very valid answer. If you, let's say, are trading intraday, till how much time does a particular level of support or resistance is valid? Let me show an example. I'll open the chart. So State Bank of India. This is one video we did on 30th of May also to prove this concept. I'll just run you through the concept again. I'm going to the monthly chart of State Bank of India. Remember one thing, that history will always repeat itself. If you have a significant level, it will hold true for a very, very, very long time. You can see the monthly chart of SBI. The level of 150 has been holding as a support from 2011. So whenever SBI comes to 2011, it will always bounce back. As simple as that. So I've given you a trade idea. If SBI in the future comes to 150, buy it without looking about anything what the country is doing. Just buy SBI because there is so much demand at your level that the sellers will not be able to drive it down. As simple as that. Does it mean you blindly buy it? Rule number one, you cannot blindly buy it. So if you see this coronavirus crash, you did get a bullish harami proving that you have to go long. If you come here, you get a bullish harami or inverted hammer. Even here, you have some kind of a doji or a hammer telling you to buy at support. You have an additional confirmation. Rule number two, you can see, you can also bounce back a little bit higher. You either bounce back exact, you can again bounce back a little bit higher. So the zone rule applies. That's rule number two. The same rule also applies to a resistance. The resistance of 320, I would say. I'll just make it a little bit shorter. So the 325 zone is a very, very strong resistance. It has been holding since 2010. So these levels, if your level is being tested multiple times on the screen, it will become a very strong level, and that level will be holding for a very, very long time. So you have to remember that. So in the future, if SBI goes to a 325 level, you have to book some profit. You cannot hold it against that will, because you have to understand that 90% of the breakouts fail. That is the reason people like to trade buy at support and sell at resistance, because 90% of the breakouts do fail. So remember all of these concepts. And if you see in the chart again, there is an intermediate level at 245. Oh, sorry. Let me just adjust it to the exact level, 235. You can exactly see that even right now, the same level which was a support earlier has now been retested again. So you can't expect that SBI will in one single shot go above 235 level. It will always, you have to assume it will take a resistance there. So these are my three rules I wanted to talk about. I can give you one more example for the rule number three, which is Larsen and Toubro Infotech. I think this will help you suffice in the market for now. Look at the daily charts of Larsen and Toubro. A lot of people ask me, when this COVID crash happened with Larsen and Toubro, why did the stock randomly stop at 690 or 700 levels? Is there a reason? Because we were not able to see any kind of support here. Was this entirely random? This was not entirely random, because if you zoom out of the screen, this actually was a very, very significant level. I'm going to show that to you right now. So if you see the charts of L&T in 2016, this level was the same level where your Larsen and Toubro stock have stopped. So what I'm trying to tell you is history repeats itself. Any significant level, if it has been multiply tested, will hold even in the future. So if, let's say, Larsen and Toubro comes to 700 level in the future due to some reason, you have to go long, because it's a very, very significant level which has been held for quite some time. So that's it for now, guys. Remember these three rules. Number one, do not trade blindly support resistance. Number two is you cannot consider it as a level. You have to consider it as a zone. And number three is any levels tested multiple times will be very strong, and they will be repeated over history time after time. You just have to zoom out of the chart and find that level, what that exact level is. So thank you so much for watching, guys. Give it a thumbs up. subscribe to our channel, and I'll see you next time on our YouTube channel of The Financial Analyst. Thank you so much.